If you trade Forex, you already know the frustration of staring at a standard candlestick chart. One minute you are riding a clear trend, and the next, a random volatile spike tricks you into exiting a winning trade early, or traps you in a losing position too late. To survive, you have to smooth out the chaos. This animated diagram shows how that works. The jagged standard chart on the screen crossfades directly into a Heiken Ashi view. In Japanese, Heiken Ashi translates to average bar. Instead of tracking every single tick of price action, it uses a mathematical formula to average the open, high, low, and close, smoothing out the most chaotic spikes. By the end of this tutorial, you will know how to use this filtered data to map a complete swing trade from your initial entry all the way to your exit. Removing market noise is a necessary step to protecting your capital. When you stop reacting to minor price fluctuations, your win rate improves, and trading becomes a more methodical process. This mockup shows where to start on your charting platform. Locate the Chart Type toggle, usually sitting right at the top toolbar. Open the drop-down menu and select Heiken Ashi. Switching to this view replaces jagged price ticks with consecutive red and green blocks that follow a much smoother path. Looking at this chart, we can identify a strong uptrend. You are looking for a chain of green candles, but specifically notice the absence of lower wicks. Flat bottoms mean the buyers have momentum. Panning over to a downtrend, the opposite rule applies. You want to see a block of red candles with no upper wicks. Flat tops indicate that the sellers are driving the price down without resistance. As the sequence progresses, a circle appears around a candle with a small body and wicks extending from both the top and bottom. This is an indecision candle. It serves as an early warning that the current trend is pausing and might reverse. Instead of analyzing individual price ticks, you focus on the overall rhythm and shape of the candle sequence. Identifying these three shapes, flat-bottomed greens, the flat-topped reds, and double-wicked indecisions, allows you to instantly see whether the bulls, the bears, or neither are currently in control. Because the system relies on average data, it has a specific drawback. Heiken Ashi naturally lags behind real-time market ticks. It won't show you the precise price at the exact second a move begins. Due to that lag, these candles are used for trend following and swing trading. They are not effective tools for high-frequency scalping. This chart pairs the Heiken Ashi candles with a moving average line. Adding a confirming indicator like this, or the relative strength index, helps account for the lag by providing secondary confirmation of the momentum. With momentum confirmed, we establish the entry rule. Wait for a new trend to begin and count exactly 1, 2, 3 consecutive candles of the same color. Ensure none of them have wicks pointing against the trend, and then map your entry. Next, we map the risk boundary. The stop loss is placed just behind the most recent indecision candle or a major structural level, protecting the trade if the setup fails. Defining these boundaries right on the screen removes the guesswork from your execution. You have a plan in place before a single dollar is put on the line. By combining Heiken Ashi's visual clarity with a confirming indicator, you convert a volatile chart into a calculated mechanical setup. Once the trade is live, you ride the established wave. Hold the position as long as the candle color remains consistent and the bodies stay smooth. In this animation, watch what happens as the trend continues. As new green candles print, the stop-loss steps incrementally upwards beneath the price action, securing portions of your profit as the market moves in your favor. The visual trigger to close the trade is specific. The moment the color flips to red, or a strong indecision candle prints with wicks on both sides, the green line drops in and closes the position to take profit. Following this rule means you will often miss the absolute top or bottom of a market move. However, it positions you to capture the core portion of the trend while the momentum is highest. An objective exit rule reduces the need to make snap decisions during a live trade. The chart provides the signal, so you don't have to rely on intuition alone. Executing exits based entirely on visual logic rather than impulse is what helps a swing trader maintain consistency over time. We started with a screen full of chaotic, unpredictable spikes. Now you have a mechanical system to help you stay on the right side of the market. Step 1 is to practice this in a demo environment. Open your account today, flip your chart setting to Heiken Ashi, and practice hunting for that strict 3-candle entry setup. Get a feel for the rhythm before trading live. If you know another trader who is constantly getting caught in market noise, share this guide with them. Mastering Heiken Ashi cleans up your screen and provides a more structured perspective on the trend.